Welcome back everyone. In today's video I'm going to show you guys how to properly filter the flow and how to set your premiums and sort of what you look for on contracts and all that. So first I'm going to start out here over on TradingView just to kind of show you guys what I'm talking about. So when we talk about filtering the flow, what I mean is we're looking for sizable premiums that kind of are more, I'd like to say, the whales, the people who maybe move the security a little more. So what I mean by that is, so with Tesla here, if you see the market cap, and just a quick breakdown, there's more that goes into it, but market cap is pretty much what the company is worth on the open market. So like Tesla, you see we're 746 billion. And then if you go to something smaller like DraftKings, it's only 5 billion. So do you think a $10,000 option on DraftKings is a little more, I'd say, whale-ish versus a 10,000 option or a premium on Tesla? So this is what I'm talking about here. So if you head on over to Unusual Whales and go up into the flow, I'll show you what I mean here. So starting with Tesla here, like let's say we go into the premium range here and put in 10,000 here. So once you put in 10,000 here, you can see how much flow we have for 10,000, which, I mean, we don't need all this. This is too much noise. This is too much data. So something with Tesla, with premium, usually, I mean, it's nuanced. You can change the premium, and I mean, it depends on your days of expiration here too. Like shorter range, I kind of will go down a little bit in premium. I'll show you what I mean here. But so let's go into a mil. So then if you do $1 million on Tesla, here we go. So $1 million, see, we have a lot less data to go through, but these are more the significant players. So for this one, and when I make my watch list, I usually kind of do 10 days out for the expiration. I kind of like the weekly expiration because you want to close it. Well, I'll show you here too. If we got rid of the days to expiration, this gets rid of everything. So now we see stuff that's 705 days away. We don't care about what's happening in 700 days from now. We're looking for short-term expirations to kind of give us an idea of how the ticker could move. So $1 million, and even $1 million for Tesla right now, that's kind of a lot. Like I would maybe do like 800,000 probably. Let's see here. So yeah, I mean, you get a little more flow. I mean, it's nuanced. I mess around with the premiums all day here just to kind of get a medium value of what I'm seeing. Like I want to see a mix of both bearish and bullish flow here. So I mean, this I would consider mixed. But now this is what I want to show you about the premiums. So now if we go look at DraftKings that had the 5 billion cap, we have no trades with this filter. Even if I take off the days to expiration. I guess we do. But I mean, 100 days out, we don't care about what's happening 100 days from now. So if I move this back to that shorter term range, like if I put in 1,000, let's see what we get for 1,000 for a premium range here. So we have a lot of mixed data here. Again, this is a lot of data that we don't need to see. So like this, I would maybe do like 10,000-ish. See, so you get a better mix. Like 10,000 is probably perfect for DraftKings. And I mean, again, this is pretty mixed data as well. So let's see here. And even, I mean, you don't want to go too high where you'll miss everything, because you will miss these multi-leg trades, and if you click on the multi-leg trades, like you'll see this, like, okay, this is 13,000 technically. Well, probably 19 counting the expirated contract, but this would have been a $19,000 contract combined. So that's kind of just some basics on filtering. Other things I look for, I'm gonna swap over to Apple here just to give you a better idea, because I know there's some more whales in Apple. So okay, let's say we're looking at Apple's flow. We don't have a premium range, and we have our short-term expiration. So this is 0. I mean, you will see every transaction that comes in, one contract, and that is not what we're looking for. We don't want to see one contract, and we don't want to see every $300 premium that comes in. So for Apple, let's put in 80,000 here, and you always want to kind of change the premium range. I mean, even as the week goes on, usually if they're weekly expirations, people are spending less premium since it's a short-term expiration. Let's do, I'm just going to stick with 80,000. So another thing I'll look for when filtering, I don't care about these small sizes of contracts, and a lot of these are deep in the money too. What I'm looking for are these whales. So you can see the size here, like you got almost 1,900 contracts here, almost 2,000 contracts here, another 1,000 there. This to me shows higher conviction, and you do want to obviously see higher conviction. If you see people buying 3 or 4 contracts that are deep in the money, that doesn't mean it's going to crash or it's going to the moon, but they're just kind of playing in the money to avoid all that extrinsic value on the contracts. So that is kind of just a basic video on how to filter. It's every company is different. There will be some people that say they'll use a static premium range, and you do not want to listen to those people. You need to change the premium ranges, and you can always mess around with your days to expiration. If you kind of want to do leaps more, I mean, you can do 20 days out, but then you will see more noise also, but you do want to kind of filter it out to get a happy medium of kind of the days to expiration and all that fun stuff. So if you guys have any other questions, this is just a complete beginner's video on how to filter for unusual whales. So if you guys have any questions, feel free to drop them in the comments or shoot me a DM or tweet me. Otherwise, everybody have a good day. Talk to you soon. Bye.